Welcome to Technical Tuesdays. This is Fred Razak, Senior Trading Strategist here at CMTrading, and we're continuing our money management series with discussing emotional versus rational trading. Now, if you find value in this presentation, make sure to smash the like button, and also please do share and subscribe. So, emotional versus rational trading. Now, we are made of emotions. We have two parts of us. We have the two most important organs in our body, our hearts and our minds, and sometimes they're not working together. And when that happens, we find ourselves off kilt. And as traders, this really puts you in a tremendous bind because you want to be rational, but at the same time, you're overcome with fear, with anxiety, with stress, and you kind of lose your balance. And there is an emotional cycle to trading the financial markets, and you could get this online. This is not something that I've developed. It's been around for quite some time, and it starts here. And it's as you're going into a trade, you start out with optimism. You also then develop into the trade, and you're happy because it's going up, and then you kind of like in an emotional kind of state, ecstatic, and you're really happy because it's going and it's working towards you. And then it starts not working towards you. And then you start, kind of fearing something. And then it goes back to where you initially bought it, right? Which was right here, and you're in panic mode. And you don't know how to let it go because you were up money in the trade. Then it continues going down. And you can see by the cycle of the different colors here that you're going deeper and deeper into kind of more dark emotional places where you get to the point where it goes against you and you actually get out here, right? Which is the maximum point of actual potential, and you get out because it's at a threshold, an emotional threshold that you've reached that you can't bear anymore. And so you get out. And what happens is that you're despondent and even depressed, right? Because you were up in the trade and you gave back some money and then it went negative. So you're really all messed up. And then, kind of like a few days go by and you kind of, get back to your center and you're back to being hopeful and optimistic again by the next trade, right? How many people have gone through this? Me. I've gone through this maybe a million times until I wanted to stop it and to control it. Now, the only way for me to control it is by setting certain parameters up, because when we're trading the financial markets, we're like this guy. We're worried, right? We're so defensive and we're so anxious and we're so stressed and we're so fearful. So how do you overcome this? What are the three elements to overcome it? They're very basic. And so we touched upon this last week where I discussed pre-accepting a certain loss before you enter the market. That way, you're completely kind of disassociated from your emotions so you could stay focused on the trade. You're not really caring about what's happening up until a certain point. When it hits that point, that's when you start kicking in a stop loss and you're saying, okay, that's it, I'm out. Okay, but up until that point, you're objective. You could still look at the trade and possibly even add to the trade because you're not scared because you've already accepted that loss before you've entered the trade. Now, how do you do this? Okay, so number one, it's very easy. You just set up a stop loss before you enter the trade, not after you've entered the trade, before you've entered the trade. Now, you could always change this, but this is the initial step. Got to put in a stop loss because that gives you the boundary that we all need. We all need boundaries, whether we impose them on ourselves or on other people on us, right, vis-a-vis us. But we all need those boundaries, and those boundaries come and help us, and they manage our trade so that it doesn't get to areas and levels that we trade so negatively, right? I get this call maybe at least 3-4 times a month. Fred, I'm in a trade and it's down. What should I do? Well, I said, why did you get yourself into this to begin with, right? And that's what we got to do. We got to play a little bit defensive before we get offensive. And you do that by setting up stop losses. That's the first thing I tell every one of our clients, put in a stop loss. There's no shame in just losing a little bit of money in order to just stay in the game in order for you to get into that next trade. And that way you're more focused on the next trade and you could just let things go. You're not emotionally connected. You're not emotionally, invested in that particular trade. You could move on to the next trade. The next one is setting up a trailing stop. If you're up on a trade, you don't want to give it all away. You don't want to get to the point where you actually give back all your gains and then you even go negative because you get to that point of like, how did I do that, right? So you got to put in a trailing stop. A trailing stop is really very sensitive that as you're going higher on your profit, you set up just maybe 10% below it, a stop loss, and say, okay, if it goes back down, so I made $100 on it, if it goes down $10, I'm out, okay? There's no shame in walking away with $90 for that day. There's no shame even if it goes to 130 or 150. There's no shame. Now, if it goes to 200, then you've got to reallocate about what were our expectations were in that trade. That's something else. But setting up a trailing stop is just very elementary. It's as the next step to a stop loss. And lastly, got to have a profit target, right? You got to be able to take your profit and stick to it because that's taking money off the table. And that's what I see. A lot of people are having a hard time with taking money off the table. And I see it lots of time, okay? If you look at a distribution of most of the trades, you'll see 90 of them are winners, okay? And then 3 or 4 of them, okay, are losers. And on those losers, they lost on all those other trades. So you want to be in a position where you let your profits run a little bit further and you have those parameters. You have a trailing stop on the downside and you have your target on the top side. So if it goes, it goes. But if it doesn't hit this point, even if it comes close to it and it just goes down a little bit further, then you've already taken your profit and you walked away a winner. Thank you for joining me. We'll see you here next week on Technical Tuesdays. God bless everybody.